And so the thing in gold or silver, anybody that, for once would talk about it from the pulpit, since we happen to be in a church today, that when you do something, you don't go, and they give the illustration of a child pulling the little plant out of the pot to check the check the roots, and if you all good it back, it's not going to grow to be a healthy plant. Most people often go into gold and silver, and they've got this mentality that they're hoping that will all just explode in price in a month's time, that they've got in right when it's about to go to the moon, and therefore they get very flustered when things go up and down, when really an investor accepts that they're part of a generational cycle. They've just got to get in and ride it, accumulate it, save it, get out at the right time. People have no problem with a property. They're quite happy to live in it for quite some time, accept it as an investment. They're not looking to sell it every 6 months. I mean, I bought a property once upon a time and bought and sold it really fast. But it's not common. There's a lot of hassle. And so gold and silver is the same. You're paying a premium to get hold of this stuff. There's no point buying it and trying to sell it a few weeks later or a few months later. You should be really having an attitude that you're buying it and you're in it, and you're going to stay there till you get real reward. So when we look at money and we see what's happening around the world, we have to ask the question, what is real money? There is this thing called fiat currency, what we understand as paper printed money. And then there's free money market, which is gold and silver. And in a life cycle of money, the free market emerges. Gold and silver have always been our store of value for some 5,000 years. But ultimately government gets involved in the free market process and seeks to monopolise that money supply. And ultimately, because government's not honest and they don't like to tax the people too much, well, they do like to tax, but eventually you can't tax the people, the easiest way to get more money into the system is just to print more. And this is what happens in the life cycle of money. This has happened to every single empire in history, every single currency in history. And there have been thousands of currencies. None of them have lasted. In fact, our experiment with fiat currency on the world's reserve currency being the US dollar is right at the limit in history of about where things fall apart. And that's a bit sobering to think about. Right at the limit. We're at it right now. 30 or 40 years. Eventually you get a confidence crisis and collapse. And then gold and silver re-emerges, free market money. You just go through this big cycle. That's all. It's a great big cycle. And so inflation, when we watch how inflation affects, everyone loves it when their house goes up or their shares go up, but no one likes it when bread goes up. And Greenspan, who was chairman of the Fed for as long as you can see his age, he said in his better days as a younger man, before he had the lofty office as chairman of the Federal Reserve, he said profoundly, as the supply of money increases relative to the supply of tangible assets in the economy, prices must eventually rise. In the absence of a gold standard, there is no way to protect savings from confiscation through inflation. By inflation we mean just printing more money. Because if you remove yourself from a gold standard, there is no safe store of value. And history is littered with people who built entire empires based on the gold standard. And in recent times we've watched Nixon take the world off the gold standard when in 1971 he said we'll no longer honour our claims in gold, but we will float on a basket of currencies that we call the US dollar index today. It just floats as a measure up and down like the tide. And you can see what happens when the tide gets really going. This is Zimbabwe. And you really have no protection from it. There's a great documentary on YouTube you can watch right now showing people panning for gold, because gold has become the real only currency there. And there's people out there just swilling in the mud with these pans to pull off tiny little bits of gold, because Zimbabwe's got quite a lot of gold, and so the people have just gone back out. And the old people, they can't pan for gold, and if they have no family, then they've got real problems. And it's quite moving. There's a link that I'll send you, and you can. Have you seen the one I'm talking about? Yeah, it's quite sad actually. It's quite sad. Because that's what happens eventually, as in Weimar, Germany, the paper ends up being only good for firewood. I mean, this has got an expiry date. Who ever heard of money with an expiry date? Spend it by the 30th of June or it's not worth anything. And this is what happens in history. So government enacts favourable banking laws. They create new money through credit expansion. And it's in the money supply. It's not. People think inflation is increasing the prices. That is just the cancer, and it manifests as things. You say, well, you've got something wrong, something happening in my bloodstream. This is just what you see on my skin. In the same world, we watch it in the same way. We watch it with inflation. The definition of inflation, if you look in the dictionary, it's an increase of the money. And because you make more bits of paper that chase the same assets, you know, if I go print an extra $3, well, you don't milk $4. Does that mean there's an extra bottle of milk in the shop just because someone's decided to print extra money? Yet the world is taking the view right now, if they print enough money, we can somehow kickstart the world's economy. That's a Keynesian argument, and it's dominated economics for the last 50-odd years. And we're watching what happens in history when you throw yourself off a gold standard. You know, it allows governments just to go into deep, deep red, and you know, so you end up with massive, massive debt. Massive debt. So when we look at what's driving gold, we've got a lot of major factors driving gold. Fear of slowing GDP, no real interest rates. You watch what happens to people's savings, they're getting nothing back. And this has happened in history. When you don't give anybody anything back, they look for something else that's going up. Because people have to invest into something. Oil exporters, they're being given dollars by the Americans, it's useless. So they want foreign reserves, they go buy gold. China, massive trade surplus, 1 point something trillion. They want exposure to gold. Everybody wants gold. Low prices in the 90s because it was in its bear market meant that cut the exploration, which means production falls for 3 straight years. But never mind 3, every single year the world produces less gold, not more gold. So on the one hand, everybody wants more gold. On the other hand, there is less gold. That's not a good combination for low gold prices. And low interest rates, obviously low interest rates, you know, people look for something else. And the last one, probably the most notable, war on terrorism. You know, there's a saying, when goods and services don't cross borders, armies do. And invariably, you watch nations go to war. That is sitting in the pipeline. But that's for another sort of discussion. We have a unique situation where all the critical drivers for gold are pointing in the same direction. So we see the beaten down nations like Asia that have given, you know, plasma TVs and all manner of things to Uncle Sam and get handed back dollar notes. But those dollar notes, Uncle Sam invested straight back in these treasury bonds. So they're asking for the money. But as fast as they've swapped them for printed money, they've said, we need this money back because we're in debt. And they give it because they want their money to be worth something. Last week, the chairman of the Premier of China said he wanted an assurance from America that their foreign reserves would still be worth something. They're concerned that America is, well, let me guess, debasing their currency. They're going to make their money worth less. And so China is looking, that had very little gold, they're looking to buy lots and lots of gold. And so I'm not going to get too hung up on some of these other slides, but it is interesting to note that you know, China and India represent some 40% of the world's population.